All right, highlight for Tuesday, be the quickest one. It won't be that quick. Maybe it'll be kind of quick. Oil, yesterday, a lot of people are seeing it go negative, went negative $40, $50. What you have to understand is that the front month was technically June, and it rolled last week. And oil in the futures roll every month. So June is the front month. The rule of thumb for people that are wondering, well, how do you know the front month? First rule of thumb is volume. The contract with the most volume would be considered the front month. So May didn't go off the board, but last week it did yesterday. So when the May contract goes off the board or expires, all right, people didn't want to be held taking delivery. And how futures contracts work is if you're long X amount of contracts, that equals X amount of product, and then you have to take delivery. Well, nobody has any place to store this stuff. Literally, it's a supply issue. No place to store it. I don't want it. They were paying people, essentially negative oil prices. I'll pay you to take this. And the person who was being paid essentially to take the oil probably cost them more to store it than it was worth. That's how you got negative numbers, or why you got negative number in the May contract, while the June, while it went down, held on to being above zero, because still people are willing to take delivery on it because they got time. Now June prices and oil prices obviously got affected and ran down. They're down 34%, 36% as I look at it today. And that was on top of the beating it had yesterday going into the close. But the May contract goes off the board and expires. People didn't want to take delivery. So they were literally paying people to take their oil. And essentially, it's like negative interest rates. You get negative interest rates, you pay someone to hold your money. And very rarely does that happen. So that never happened in crude oil. Caught a lot of people who have been career oil traders by surprise. Not only did it go negative, it went negative $40, $50. It's amazing. So the June contract is trading around $12 a barrel, $13 a barrel. And I always say this, and I've been saying it since the beginning of the correlation, oil will influence the ES and stock indexes. So when it moves a lot, if it moves a lot up, it usually creates some upside in stock indexes. And when it moves a lot down, it creates some downside. Look at the stock indexes down 2, 3, 3.5%. There's no coincidence that oil down 30% and it's driving stock prices lower because it beats up on the energy sector. All right. That's why oil has influence on stocks when they move a lot, and they're obviously moving a lot. So just remember, the May contract went off the board yesterday, and it created panic selling. Nobody wanted to take delivery on a product that you have no place to store it. Storage fees are so high that you end up losing money. And now OPEC and a lot of oil producing countries, they don't, for some reason, want to blink and cut production more than another country might. They're all worried about, I'm not going to cut if you don't cut. You're not going to cut if I don't cut. So nobody cuts, and oil prices go down 10%, 30% to these levels. And now you just had a headline come across that right in here, Texas oil regulators are split on limiting oil output, right? Oil went down 50 or 60 cents. That's a huge move. That's a huge move when it was $52 a barrel, let alone $13 a barrel, right? And what did the S&Ps do? They got weak. So you have to know cause and effect, and you have to know what another market's doing, especially on a day like today with crude oil, a day like tomorrow, and a day like any day, it's going to move a lot. And then you get the CFTC, which is the regulatory body over futures, said no missed margin payments. Again, that's it's a good thing from a financial security standpoint, but irrelevant to the fact that this market is and has no place to put this stuff. Zero place to put it. And they were paying people to take it. And it was panic because the May contract was literally going off the board. So you had to make a decision. It's like going into the close where you only got a minute or two to get out of a position, but at least it's going to open up tomorrow, right? Stock market's going to open up tomorrow. With the May contract and in futures, it's off the board. You're stuck. You're taking delivery. And nobody wanted this stuff. Pay attention to oil and any influential market to what you trade. When it's moving a lot, it's influencing a lot.